Let's take a look now at the markets in the east of Africa, in Kenya. And what we've got there is Access Kenya was the lead gainer there. The NSE 20 share index gained 0.49%, and if we're looking there at the investor interest in that market, it is up on the expectations of end-of-year results coming out. And as we've discussed before, the Kenyan companies don't often update as fully as the South African ones do, so there's more surprises perhaps to come in that market. And then looking at the shilling, we've got the shilling again, the central bank intervening there, and we will not be able to expect that for. Let's move now to Ken Kaniu, a senior investment manager at Stanlib in Kenya. Good morning, Ken. Let's look at the strong demand which is being talked about in terms of selected counters, not all the counters, ahead of the end-of-year results.
I think we're seeing strong demand coming through, especially on the banking side. If you look at some stocks like KCB, look at stocks like Barclays, there's quite a bit of demand coming through, but not from local investors, more from foreign investors. I think from the point of view of a bank like Barclays, if you look at where it is that it's been coming from, it's been managed in a very conservative manner. Profit after tax has been growing in strong single-digit returns over the last couple of years. And this against a loan book that's actually been shrinking. So it just speaks to how conservatively the bank has been managed. But in 2013, we're expecting them to open up their loan book. We're also expecting them to be able to grow by cutting costs, because their cost-to-income ratio is still slightly higher than that of their peers. And lastly, if you look at the impact of the ABSA transaction, ABSA's stated intention is to go retail across the continent. So Barclays now should turn into more of a retail bank rather than a corporate and a wholesale bank. And additionally, they are very keen on opening up new business lines in insurance and asset management, and the cross-through into distribution tunnels like bank assurance for insurance, retail wealth management for asset management. These are all things that are beginning to be priced into Barclays, I think, going forward. KCB, obviously, the regional play, regional story continues to be very good. In prior years, they paid us a dividend of 185. We're expecting to be paid in 2012 around 2 shillings or slightly below, which will give us a dividend yield between 5.5% or 6% in a bank that is still growing. So from the point of view of regional growth, the banking sector is poised to do fairly well. Barclays announces tomorrow, KCB announces on Friday, and if those results come out as expected, Barclays strong single digit, KCB double-digit returns, and we really should see the banking sector continue to do fairly well. EABL, from a relative perspective, in terms of relative valuation, is a stock that has done very well. Over the last 12 months, has done in excess of 80%. And really, if you look at it relative to its African peers on a PE basis, it actually looks fairly undervalued, because EABL is trading at 22 times, whereas the rest of the other African brewers trade in excess of 40 times. If you look at companies like Balera has gone up 5 times since its IPO a couple of years back. Last year, it was up more than 100%. And again, if you look at TBL over in Tanzania, it trades at a PE of 6, dividend yield of 8. So really, from the point of view of foreign investors, a lot of them are piling into the brewing stocks across Africa, and for EABL, and especially Kenya, that provides an attractive entry spot. So it's really those types of companies which have a regional play, more exposed to the consumer dynamic. Those tend to be the companies and the share prices that tend to be escalating fairly rapidly, over the last 6 to 9 months.
Yeah, and also those are shares that will respond if the economy grows, consumers in a better position, more banking, more beer drinking, I suppose, is one way of putting it. Just looking at that banking sector, what kind of pressure are the banks under if you look at the global regulation issues of separating the retail side from the investment side? In some ways, many banks in Africa are developing that kind of combined model at a time when perhaps it's out of fashion globally.
No, that's true. I think what's happened, especially if you look at the UK, with the King Commission, you look at what's going on in the US, there's been that separation that's come through between retail and wholesale banking. But what's happened, or rather investment banking, but if you look at what goes on in investment banking, the guys tend to run their own proprietary prop books. They tend to actually trade using their own capital, and in a lot of the cases it was found that this capital was actually not theirs. It was actually money that was coming through from the retail bank being passed across to the investment bank to make money. If you look at what goes on in this part of the world, particularly in East Africa, investment banking is more confined to equity capital markets and debt capital markets, and really this involves enabling their clients to come up with financing solutions. So if it's on the equity side, it's more things like corporate actions, like rights issues, IPOs. If it's the debt side, it's things like syndicated loans, corporate bonds. So they've not yet gotten to a stage where the investment banks are actually using their own prop book, to trade in derivatives, to offer clients solutions off the back of their own balance sheets. So from that particular perspective, we are more insulated. It would be more of the stockbrokers, and especially those who have investment bank licenses, who have been the ones, who are the ones who are obviously having this particular, conundrum. But from the point of view of commercial banks, at least that separation is very, very clear with respect to what you can use your capital for, and also deposit as money for.
Yeah, fascinating stuff. Let's stay with banking also, because another, or rather lending, which is one of the things that banks do. Centum got renewed growth yesterday on the exchange, and apparently interest in that because of its exposure to a stake in the investment firm Platcorp, which has growing microfinance exposure. So that's a microfinance thing for Centum. Microlending in Kenya, and I say that is in the context of in South Africa, we have African Bank, able under pressure. They've been accused of reckless lending, and the microfinance area, unsecured lending, always vulnerable to that kind of accusation, although they say they've been very secure in the sense of not being reckless. What is the environment there, Ken, for microfinancing and unsecured lending, and which banks are exposed to it?
I think from the point of view of Platcorp, what's happening here is that all the lending that Platcorp do, and not just in Kenya but in the region, because Centum bought into the holding company that has, that has subsidiaries in Kenya, Uganda, and Tanzania, is that it actually offers only secured lending, and this is secured lending off the back of a payroll. And you actually find that their default ratio is less than 5%, which is actually fairly good. Another thing as to why microfinance has taken off fairly well and continues to be regulated fairly well is because they use portfolio at risk methodologies from the point of view of calculating credit risk. Commercial banks actually use non-performing loans, that kind of methodology. So you have to wait for a loan to go. You have to wait for non-payment of 90 days for you to actually declare that the loan is going bad. With portfolio at risk for microfinance, once you default on your repayment even for 1 day, then it's immediately flagged up. But I think really, if you look at the kind of regulation that we have in Kenya for microfinance, it's now under the ambit of the central bank. There are now regulations with respect to levels of capital, with respect to levels of employee staffing, with respect to IT, and so on and so forth. It has been a sector that has done fairly well. I think also, if you look at the culture of Kenyans, we have a lot of Kenyans who are actually outside the formal financial system, and as a result, we've seen a very strong proliferation of what we can call the non-formal financial system. Obviously, you'll remember that Kenya is the home, at least in Africa, of savings and credit unions. People have got a history of saving and borrowing through community-based organizations, and this is simply now being transferred into a more formal process through microfinance. So I think the potential for microfinance is fairly strong. The history obviously is quite deep. People are aware of lending through or borrowing through microfinance, and add to that the regulation, and all that is feeding through right now into Centum's share price, because also the exposure that it gets to consumer credit across the region is something that is quite attractive.